Okay, we'll do the cash flow statement. What it says, see, it's a very simple. Now you can understand what is the how the cash flow statement will work. Is it right? I will just make sure that how it will work. Is that whenever the assets will increase, what will happen? Cash will decrease. Is that whenever the assets are decreasing, what will happen? Cash will increase. Is that now another? This is the one rule. Is it right? Another rule says that whenever the liabilities, is that whenever the liabilities, equity and liabilities, is it right? Equity and liabilities increases, what will happen? Cash will increase. Is it right? Equity and liabilities, liquidity and liabilities are decreasing, what will happen? Cash will decrease. Is it right? And whenever this is the rule number 1, this is the rule number 2. Is it right? Now, what happens? You have to any asset account. Is it right? Any asset account. Is that if we have to see the difference? Is it right? Where the difference is there? Whether the difference will be on the debit side or the difference will be on the credit side. Is it right? That is the basic thing. Is that we are talking in terms of asset, we are talking in terms of equity and liability, also the same thing. Is that as simple as that? You are thorough with this. Automatically we have done with the concepts as such. Is that what they have said? They have mentioned. They have given you a balance sheet, financial statements. Is that they always give financial statements for 2 years. Is that they gave it for, is that the property, plant, equipment, current assets, receivables, cash in hand, and cash at bank. Is it right? Now, apart from that, they have given you a is it right? It is there. It is right. Now they gave you ordinary shares. Is it right? Non-current liabilities and current liabilities. And in the end, they gave you that income statement. Is it right? See the adjustments if they have any given. Is it right? See the adjustments. Profit for the year. We have to start with profit for the year. Okay. We have to start with what? We have to start with profit for the year as such. How much is the profit for the year? 186. Is it right? Profit for the year is how much? Oh, profit before tax, not for the year. Profit before tax is how much? Profit before tax is 290. Okay. Profit before tax is how much? 290. Is it? Profit before tax is how much? 290. Fine. Now, with this profit before tax, we will do all the adjustments as such. Is right? They gave you now. While doing this, we have to be very, very clear about this. Is it right? On October 1st, they have issued equity shares at a premium of how much? At a premium of 100%. Means if it is 1, means they have issued for 2 reals. Is that the proceeds were used to finance the purchase and cancellation of what? Purchase and cancellation of the 10% loans. Means they one side they have see one side what they have done, they have raised the equity. Is it right? Another side what they have done, they have repaid the loan. Is it right? A bonus of issue of 1 to 10 shares were held on November 1st, 2002. All shares in issue means for every share they got the bonus share. Is it? The current assets is how much? The current assets was a 30-day government bonds. Is it right? Property, plant and equipment includes certain properties which are revalued in the year. Property, plant, dispose. Yeah, this means whenever you are talking about property, plant, equipment, we have to take this. Is it right? Depreciation is 87,000. Is it right? Depreciation. The accrual includes interest payable 33,000 September 2002 and 6,000 in September 2003. Okay. Interim dividends are how much? Interim dividends are paid by 53,000. Is it right? Now, Is it? Now, what we have to do, we have to make sure that how the uh, things will work. Okay, 1 minute. Fine. Is it? Now, how to start? Is it right? Take the things which are is it right? Take the things. You see what happens. We have to take profit before interest. What is the format? First I will revise the format. Okay. When 1 second, I will take 1 minute time for that, so that I will revise the format. What we have, how we have to do. Is it right? How we have to do it is there. 1 minute, 1 second. Is that here? Is that you have to take profit before tax? Then you have to take adjustments, finance cost, depreciation. Is it right? Anything profit and loss on current assets. Is right? This is the first step. Okay, profit before tax, finance. We have profit before tax. Is it right? Finance cost we have to take. Is that finance cost we will take? Then you will have the depreciation. Profit and sale of non-current assets, is right? Then we are talking in terms of increase in the prepayments, accruals is there, is it right? We follow this step very precisely, okay? We will not deviate from it. Now, first finance cost, is that? First we will take finance cost, then we will take depreciation, then we'll see how we will follow the steps as such, okay? Now, is it? Now, finance cost, how much they have paid? They have paid how much finance cost? 19. Is it right? How much is the finance cost they have paid? 19. Is it? Finance cost is how much? 19. Is it? I will put here. I will put here working, nothing will happen, okay? Nothing will happen. Working note 1, is it right? Working note 1, is it right? Finance cost. Finance cost. Make it a T table, okay? It will be easy for us, is it right? Make it a table, debit and credit. Now, they have shown the finance cost interest, is that? They have shown it on they have reduced it, profit and loss account. Is that? If profit and loss account debit, what does it mean? Credit will be, see, I will write here, is it right? I will write here, this is for finance cost, is it right? If debit is profit and loss account, credit will be what? Credit will be finance cost, okay? Credit will be finance cost. On the credit side, we have to write what? We have to write profit and loss account. How much is there? 19. Okay. See the things. If there is any finance cost, is there anywhere? Is it right? Finance cost is there. Bank overdraft, yeah, they have mentioned here, is it right? See the things they have mentioned here. See, point number 6, is it right? Point number 6, what they have mentioned? They mentioned that, see the point number 6, is it right? Point number 6, they have mentioned that it is interest payable. Interest payable, opening balance is how much? 33,000. Closing balance is how much? 6,000. Fine. They have the opening balance and closing balance. Fine. Now, Is it interest payable? Interest payable is nothing but accruals. Is it right? Here what they have mentioned, interest payable. It is which number? Which number? Point number 6. Is it right? Point number 6. This is with respect to point number 6. Is it right? This is with respect to what? Interest payable. Is it right? Interest payable. How much is the opening balance? Opening balance is 33. Is it right? Closing balance is how much they have mentioned? Closing balance. Is it right? This is which one is there? On the right, yeah, 2002 and 2003. This is 2002. This is 2003. Okay. Now they have mentioned opening balance. Is it right? Opening balance is how much? 33. It is a liability. Got my point? It is a liability. If it is a liability, which side we will show opening balance? Debit side or credit side? Liability, which side will show? Debit side or credit side? Opening balance. Credit side. Okay. Credit side. That's why. Okay. Means on the credit side, what is it right? Balance. Is it right? Balance brought down. Balance brought down. This is in thousands. Is it right? This is in thousands. Okay. Balance brought down is how much? 33. It is right. This is in thousands. Fine. Now closing balance is how much? They have mentioned closing balance. Is it right? They have mentioned closing balance. How much is the closing balance? Point number 6. Is it right? Closing balance they have mentioned how much? 6,000. Is it? Closing balance they have mentioned how much? 6,000. Now this much is there. That's all. Is it right? We have taken the profit and loss account. We have taken the balance sheet. That's all. Is that? What is the total we are going? We will get 9 plus 3 2 1 152. Is it right? How much we are getting? 52. This is not. You put it as 6,000. Okay. You put it as how much? 6,000. Is it right? Now what is the 52? Is it right? How much is the difference? Difference is how much? Is it? Difference is how much? Difference is it? Difference is how much? Difference is how much? 52 minus 6. It is 46. Is it right? It is nothing but interest paid. Is that interest paid? Right? It is nothing but interest paid. Are you okay with this? Next, okay. What we do? We'll talk now. We have done accruals. Is it right? We will do the income tax also. Is it right? We will do the income tax also. Income tax is how much? Income tax opening balance is 90. Closing balance is how much? 100. Is it right? I will write here only. Okay. I will write here only. It makes sense. Is it right? Working note. Is it right? Working note 2. Is it right? Working note to income tax. Is it? Opening balance is how much? Income tax 90. Okay. It is a liability. Now I will not ask you. Okay. Opening balance is 90. Closing balance is how much? Closing balance is 100. Okay. Opening balance is 90. Closing balance is 100. Just go through it. What they have done in profit and loss account. Anything is there in income tax? No, nothing is there. Second point, third point, fourth point, fifth point, sixth point, seventh point. Nothing is there. Is it right? Nothing is there. Now you go to the in here. Is that we have taken this one we have taken. Is that income tax? Profit and loss account. Is it right? Where is that profit and loss account? In the profit and loss account, income tax is there. Is that income tax? How much is income tax? 104. Is it right? 104. Same thing. See, you should make it a, what we have done, debit here, profit and loss account. Is it right? I'm writing very small. Credit will be what? Credit will be income tax account. Okay? Credit will be income tax account. In the income tax account, is it right? In the income tax account, on the credit side, you have to write profit and loss account. Is that on the credit side, you have to write profit and loss account. How much is the profit and loss account? 104. Is it right? That's all is there. Is that total? How much you will get total? 194. Is it 194? What is the difference we will have here? Difference is how much? Difference is 94. Is it right? This is nothing but tax paid. Is it? This is nothing but tax paid. Okay, fine. We have done income tax, we have done accrual. We will take trade payables, it's not a big thing. Bank overdraft. We'll take loans also. Is it right? We'll take loans also. Is it right? Next. Is it? We'll take the loans also. Next. Fine. Now, what we have to do, we have to make sure that we will take what we have done this profit before operations, income from investment, fine, finance cost is over, income tax is over. Is it right? Now we will take what, see again, just cash in bank, cash at bank, investments, we will see. Okay, investment, interest receivables, fine, trade receivables, is it right? Trade receivables, inventory, fine. We will take property, plant and equipment. Okay, we will take property, plant and equipment. How much is the property, plant and equipment? Put it as working note 3. Is it right? Put it as working note 3. Is it right? I am writing immediately there only. Okay, property, plant and equipment. Is it right? Property and plant and equipment. How much is the opening balance? Opening balance is 510. Is it right? Opening balance is 510. Closing balance is how much? 634. Opening balance is 510. It is in thousands. Okay, it is in thousands. Is that? Closing balance is how much? Closing balance is how much? Closing balance is 634. Is it right? Closing balance is how much? 634. Fine. Now, slowly and steadily we will see the related things related to property, plant and equipment. Fine. Property, plant and equipment. Whatever, what is there, what is not there, we'll see. In the profit and loss account, anything is there? Nothing is there. Is it right? Nothing is there. Income from investment is there. Is it right? Other comprehensive income. Gain, other comprehensive income. Gain on what? Gain on revaluation. Is it right? Gain on revaluation. How much? Gain on revaluation is 50. Is it right? What will happen? The assets increases. Is it right? What will happen? Cash will also increase. No, 1 minute. Is it right? 1 minute. Is that the asset is increasing? When the asset increases, which side we have to put it? We have to put it on the debit side. Okay, we have to put it on the debit side. If our asset increases, debit side. If asset is decreasing, credit side. If liability is increases, on the credit side. If liability is decreasing, it is on the debit side. Liability. See, I will write here. Okay, if asset increases, debit side. Is it right? If asset is decreasing, it will be on which side? Credit side. If liability, equity and liability, it applies to both. Is it liability and equity? Is it right? Increases, it will be on which side? Credit side. If equity and liability, if equity and liability is decreasing, it will be on which side? It will be on the debit side. Okay. These are the rules. It will never change. Okay. Now, how much is there? 50. Is it right? In the property, plant and equipment, in the property, plant and equipment, on the debit side, what we have to write? Revaluation. Is that revaluation? Which one? Which one? It is in the income statement. Is it? No. Where it has been given? It is given in the other comprehensive income. Okay. It is given where? It is given in other comprehensive income. I will write for your understanding. Okay. Other comprehensive income. How much is there? 50. Is it right? Now. Is it? Now. What? Just go through it. Is it right? Next. See the adjustments. Adjustment point number 3. Okay. Adjustment point number 3. Property, plant and equipment includes certain properties which are valued in the year. We have done this. Is it right? How much we have done? 50,000. Property, plant and equipment disposed of in the year which carrying amount of how much? 75,000. How much you have received cash on disposal? You have received cash on disposal of how much? 98,000. Is it right? How much you have received? 98,000. What is the depreciation we have calculated? Depreciation is 87. What will happen because of depreciation? Asset decreases. Is it right? Asset will decrease. It will be on which side? It will be on the credit side. Is it right? Asset will decrease. No. They have received. They have sold. Is it right? When they have sold it. Is it right? When they have sold it. Is it right? When they have sold it, asset will, what will happen? Asset decreases. What will happen to that? Cash will increase. Okay. This is for the selling purpose, and this is for the depreciation purpose. Is it right? Little bit careful on that. Fine. Means on the credit side, how much you have to write? We have to write 75,000. We have to write 87,000. Fine. Now, is it? Fine. On the credit side, disposal. Is it right? On the credit side, disposal. How much is the disposal? They have said 75. Is in thousands. Is it right? They have calculated depreciation also. How much they have calculated depreciation? 87,000. Is that which point it is? It is both in one point. Is that point number 4? Point number 4 and point number 5. Okay. This is point number 3. Is it right? This is point number 3. Okay. This is point number 3. Is it? This is point number 3. Is it right? And these two are what? This is point number 4 and this is point number 5. Fine. Now, is it okay? That's all. Is it right? What is the total? We don't have anything else. Is it right? Do the total. On which side total is big, high? On the credit side. Is that 7 plus 5, 12, 12 plus 4, 16, 1, 15 plus 3, 18 plus 1, 9, 796. Is it right? What is the difference? 796. Difference is how much? Difference is 560. Is it right? How much difference? 236. Now, what happened? They have purchased the asset or they have sold the asset? Tell me first. They have purchased the asset or they have sold the asset? If it is difference on the debit side. Difference is on the debit side. It means what? Difference is on the debit side. If asset increases, La ilaha illallah. If asset increases, it will be on the which side? It will be on the debit side. When the asset will increase? When you purchase an asset, asset will increase. Okay? I will tell you, no problem. if asset is decreasing, is it right? If asset, when the asset will decrease, when you have sold the asset, is it right? When the I told you just now, it is there on the left hand side. Okay, it is there on the left hand side. It is not gone far away from us. Is that, see the thing, asset decreases? No, somewhere I have written here. See the things. Is that just now? Even you have not given that much time to. Is it right? See the thing. Asset decreases. It is on the credit side. Is it right? These rules are very, very important. Is it right? Now, asset is decreasing. When the asset is decreasing, when they have sold the asset is on the, difference is on the debit side. Is it right? Difference is on the debit side. If the difference is on the debit side, it means what? It means the purchase. What happens to cash? What happens to cash? Tell me. Is it? When what happens to cash? Cash will decrease. Is it right? Cash will what? Cash will decrease. How much? 236. Okay. Now, fine. This is over. You have trade receivables. Fine. We'll take. Investment is there. Investment has increased. Right? Current asset increasing. Cash will decrease. Okay. Interest receivables 9 and 4. Is it right? Interest receivable 9 and 4. You see the profit and loss account. Is that income from investment? How much is the income? Income from investment. Income from investment is how much? Income from investment is 5. Okay. Income from investment is how much? 5. Is it right? Is it? It is an asset. Is it right? This is an asset. Is it right? Interest receivables. Is it right? Working note 3. I am putting here working note 4. Is it right? Working note 4. Is that interest receivables? Is it right? Interest receivables. You have debit, you have credit. Is it right? It is an asset. Is it right? Opening balance will be on the debit side. How much is the opening balance? Opening balance is 9. Okay. The opening balance is 9. Closing balance is how much? Closing balance is 4. Is it right? Profit and loss account. How much is the profit and loss account? Interest receivables. Profit in interest on investment 5. Okay. Interest on investment how much? 5. Is it right? Profit and loss account. See the thing. Is it right? I will write here. Is that debits credit? What we have done? Income is a credit. Is it right? Income is a credit. Income. Okay. Debit all nominal account. Debit expenses, losses. Credit income and gain. Is it right? In the profit and loss account. Is it right? What we have done? Credit is what? Profit and loss account. Debit is what? Debit cash. What comes in? Is it right? Debit what comes in? What happens? Interest receivables. Fine. How much is there? Total is 14. What is the difference? Difference is 10. Is it right? Difference is how much? Difference is 10. Is it right? This is nothing but net interest received. Is that net interest received? How much net interest received? 10. Okay. Okay. Now, Inventory, trade receivables, interest receivables, investment, cash in hand, cash at bank. Fine. Ordinary shares, revaluation, is it right? Revaluation, fine. We have done this. Revaluation is over, okay? Revaluation is over. We have done in property, plant and equipment, okay? You have the 10% loan, 40, yes, and 5% loan notes, 349 and 329, okay? 329. How much is there? You have, is it right? You have current liabilities. Bank overdraft is there. Is it right? Bank overdraft is there. Fine. Is it right? Now what we'll do, we will prepare statement of cash flows. Is it right? Statement of cash flow for the, is it right? For the year ended 30th September, is it right? 30th September 2003, okay? 2003. First, what we have to do, we have to take profit before tax, is it right? Profit before tax. See, you take any example, it will have the same thing, okay? You will have the same thing as such, is it right? Cash flow from operating activities. Is it? Cash flow from operating activities. Fine. When you have cash flow from first item is what? Profit before tax. Is it right? First item is what? Profit before tax. How much is the profit before tax? How much is the profit before tax? Profit before tax is 290. Okay? Profit before tax is how much? 290. Profit before tax is how much? 290. Fine. Next. Now you will make adjustments. Is it right? Now you will make adjustment. The first adjustment, is it right? The first adjustment is add depreciation. This is you make it a rule, okay? You make it a rule. The first depreciation, the first adjustment is depreciation. This is in thousands, is it right? This is in thousands. How much is the depreciation amount? Depreciation amount is how much? 87,000. Is it right? 87,000. Fine. Now, what we have to do, we have to make it a point. How much we have? Is right? We have what we have to do. We have to take into consideration. Just I will go to the format. Okay. Just I will go back to the format so that it will be easy for you to understand what we are doing. Is it right? What the format says? Format says that investment income. Investment income, see, minus. Is it right? Finance cost, add. Is it right? Your finance cost should be added. Is that finance cost should be added, and investment finance cost should be added, and investment income should be minus. This is the standard rule. Okay, this is the standard rule as such. Is it right? Immediately you have, before you go for a current assets and current liabilities. Is that before we go for a current assets and current liabilities, what we have to do? We have to add interest. Is it right? We have to add interest finance cost, and we have to deduct what? Interest income. How much is the finance cost we have done? How much is the finance cost we have done? Is that it is where it is in working note 1. How much is there? Is it? How much is the finance cost? Profit and loss account is how much? 19. Okay. Profit and loss account is how much? 19. Fine. Is it? When we are doing this, at this point we have to take profit and loss account. At the later stage we have to take the difference. Okay. That is the basic thing. Means you have to take both. Is it right? In the beginning you have to add. In the end you have to deduct. Is it right? In the next stage we have to deduct. Is it right? Fine. Now what we have to do? Add. Is it right? Add finance cost. Is it right? Add finance cost. Is it right? Profit and loss account. How much is the finance cost? Is it right? How much is the finance cost? Finance cost is 19. Okay. Profit and loss account. Fine. In the same way, is it right? In the same way, income from investments. Is it right? Income from investments. Is it? How much is the income from investment? We have, see, we have to make sure that how much they have deducted. See, profit and loss account, we have to make sure. Is that? This is how I have to write. First you have to take profit and loss account. The second we have to take difference. Okay. Just remember this. Is that first you have to deduct what? We have to deduct profit and loss account. Then you have to add it. Is it right? Then we have to add it. How much is there? First you have to deduct. Is it right? Minus interest receivables. Is it right? Interest receivables. How much is the interest receivables? 5. Put it like that. Profit and loss account. Is it right? Profit and loss account. How much? This time. Next. Is it right? What is there? I will go back to the things as again. Okay. I will go back to the format so that you will follow the format precisely. Okay. They say that profit or loss on sale of non-current assets. Okay. Profit and loss on sale of what? Non-current assets. Now, is it right? Profit and loss on sale of non-current assets. When we say profit and loss on sale of non-current assets, they have sold one asset. Is it right? They have sold one asset. See the thing. Is it right? Now, I will write here only. Okay. I will write here only. Is it right? Working note. I think 5. Is it right? Working note on 5. Is it right? What they have said, what is the carrying amount? Carrying amount is how much? Carrying amount is what? Carrying amount is how much? 75,000. Is it right? Can we put like this? 1 minute. 1 minute. We will put like this. 1 minute. Is that? We put like this. Is it? No. What is that? The cash on disposal. Is it right? Cash on disposal. How much? 98,000. Okay? In thousands. Fine. Now, less carrying amount. Is it right? Less carrying amount. How much is the carrying amount? For that it is 75. Difference is how much? 3. 9 minus 7, 23. This is what? This is profit on disposal. This is what? Profit on disposal. Is it right? Profit on disposal should be deducted. Okay. Profit on disposal should be deducted. Minus Is it minus profit on disposal? Is it right? Working note 5. Is it right? How much is there? 23. Is that how much is there? 23. Is it right? How much you will get? Just make the total of this. 87 plus 19. Where is the 87 plus 19? How much? 87 plus 19 minus 5 minus 23. It comes to how much? It comes to 78. Is it right? It is just a matter of what? It is just a matter of mathematical calculations, nothing more. Is it right? Next. Then we will say what? We will talk in terms of, current assets. Is it right? We talk in terms of current assets and current liabilities. What happens? See the thing. Go back to the current assets. Okay? Go back to the current assets. Now, what happens? See the things. How much is the inventory? Inventory is how much? Is it right? Inventory is how much? Inventory is 460. Inventory increased or inventory decreased? Inventory decreased. Is it right? What is the difference? It has been inventory decreased by how much? 40. Is it right? Asset decreases. Cash will what happen? Asset is decreasing. What happened to cash? Asset decreases. Cash will increase. Okay. Next. How much is this? Is 320. How much it has been increased? Is it right? How much it has been increased? It has been increased by how much? 70. Okay. Interest receivables we have done. Is it right? Interest receivables we have done. Investments is there. Is it right? How much is the investments? Investments is how much? 50. Is it right? Investments is how much? 50. We will see that. Okay. We will see investments at a later stage. Okay. Not now. Is it right? In the investment activities we will see. Okay. Cash in bank is there. Cash in hand is there. Fine. We are not concerned about that right now. Okay. We are not concerned about right now. Next. What is there? Go to the liabilities. Is it right? Liabilities. In the liabilities, what happens? See the thing. We have bank overdraft we will take. Payables is there. Is it right? Payables. Payables has been what? Payables has been increased. Is it right? How much it has been increased? It is increased by 150. Okay. Current liability. Liability increases. Cash will increase. Is it right? Liability. Now we have only taken how much? In the point number 6, we have taken only how much? We have taken only 6. Is it right? We have taken only 6,000. Is it right? Now, what is the balance is there? Balance is how much? 30 is there. Is it right? Balance is how much? 30 is there. Is it right? That 30 we will consider. Is it right? What happens here? The thing. Liability is increasing. Cash will also increases. Is it right? Liability is increasing. Is it right? Cash will also increase. How much the cash will increase? Cash will increase to the extent of how much? To the extent of 30. Is it right? Okay. Slowly you do. Inshallah, it's make things very. In this segment, what we'll do? We'll take current assets. Sorry, we take current assets and current liabilities. Okay. In the current assets, we'll take inventory. We take receivables. We take payables, we take accruals. Okay, that's all we will take in this segment. Fine. Now, what happened? Inventory. Is that inventory? How much is the inventory? Inventory is how much? See the things you have. I will write here. Okay, I will write here for your understanding. Is that inventory is how much? Inventory is 460 and 420. Okay. Inventory is how much? 460 Is that inventory is how much? 460 opening and 420 is how much? Closing. Is that inventory has been decreased. How much it has been decreased? In terms of 40. Is it right? What will happen to cash? Cash will increase. Is it right? Put as how much? 40. Is it right? Next, receivables. See, you don't write all these things in examination. This is only because you have. I want to make you understand. Okay, I want to make you understand. As simple as that. Is it right? You have what? You have receivables. How much is the receivables? 320 and 390. Okay. How much is it? 320 and 320. 320 is opening. 390 is closing. Okay. How much it has been increased? Increased by 70. What will happen to cash? Cash will decrease. Payables. Is it right? Payables. How much is the payables we are having? Payables is how much? 400 and 550. Okay, 400 and 550. Is it? Payables is how much? Payables is 400 is opening balance, 550 is the closing balance. Difference is how much? 150. Liability increases. When liability increases, cash will also increase. Accruals. Is it right? Accruals. How much is the closing balance? Closing balance is 30. Okay, closing balance is how much? 30. They have the adjustment. Is it right? 0.6. How much is that adjustment? See, 36 closing balance. How much is the adjustment? 30. Is that how much is the adjustment? 30. What happens? Current liability is increasing, cash will also increases. If I write like this again and again, you will understand what's happening. Is it right? You will understand what's happening. If current liability increases, cash will increase. If current assets is decreasing, cash will increase. This is the rule. That if you understand the rule, nothing is there. Is it right? How much is there? 30. Is it right? You have 41, 40 there, 70 there, 150 there, and this. Now you put like this. How much you will get? 150, 180, 150, 150, 180, 180, 220, 220 minus 70, it comes to how much? 150. It comes to how much? 150. Add 290 plus 78 plus 150. Is it right? 290 plus 78 plus 150. It comes to how much? It comes to how much? 290 plus 78, 290 plus 78 plus 150. It comes to how much? 518. This is cash generated from operating activities. Is that from operations? Is that not is that no? Okay, cash generated from operations. Is that now? How much for this? Is it right? Now this is what we have done. Is it right? Again I will go. I want to make sure that you should be very clear what we are doing. Is it right? And next, cash, is it right? Cash generated from operations. Fine. After this, is it right? After this, what we have to do? We have to pay interest. Is it right? How much you have paid interest? How much you have paid interest? Interest is how, finance cost is how much? 46. Income tax is how much? 94. Is it right? Finance cost 1 and income tax 2. Okay. Is it right? Finance. Is it? Now what you have to do? Less. Is it right? Less finance cost. Is it right? Finance cost difference. Is it right? Difference. Is it right? Working note, working note, working note 1. Okay? Working note 1. How much is there? How much is there? It is how much? 46. Okay? Minus. Is it minus income tax? Is it right? Minus income tax. Again, difference. Now you will understand. Is it right? Working note 2. Is it right? Working note 2. How much is the income tax we have paid? We have paid 94. Okay. Just go back to it. What is the working note? 94. Okay. 94. Fine. That's all. Is it right? How much is there? You do the total for 518 minus 46 minus 46 minus 94. How much will come? 518 minus 46 minus 378. Is it right? 378. Is it? This is cash generated from operating activities. Point number A. Okay, point number A. Fine, good. This is what happens, is it? Now, next is what? Next is it right? What we have to take? We have to take investment activities. Is it right? We have to take investment activities. In the investment activities, you have to take property, plant and equipment. We have done something, is it right? In one of the working notes we have done working notes. Where is the working notes we have done? Where is the working notes we have done? Yes. Is it right? We have done working note in the 3. What happens? We have purchased. Cash will what happen? Decrease. Is it right? Cash has been decreased. Fine. Is it working note? Is it working note 3? Is it right? Working note 3. Is it right? Is it? We have purchased. Is it right? We have purchased. When you have purchased, how much you have purchased? 236. Is it? We have purchased how much? 236. Is it right? Next. What we have to do? We have sold. Is it right? We have sold the assets. Is it right? We have sold a property. Is it right? Sold a property. Property, plant and equipment. Is it property, plant and equipment? Which point it is? Point number 4. Okay, point that is cash received. Is that you have cash received means cash balance will increase. Is it right? Is it cash balance will increase? Is it point number 4? Is it right? How much we have? We have. This is purchase, is it right? This is minus. Purchase means what will happen? Cash will decrease. Sold is nothing but cash will increase. Is it right? Cash will increase. Apart from that, we have, see, there is what is there? We have done something, we have received interest. Is it right? We have received interest on investments. Is it right? Interest on investment. How much we have received interest on investments? 10. Working for difference. Is it right? Working for difference. Is it? Add. Is it? Add interest on investment. Is it right? Interest on investment. Working note 4. Is it right? Which one? Working note 5. Sorry. Working note 5 difference. Is it right? Working note 5. How much is that? It is 10. Okay? It is 10. That's all. Is it right? We don't have anything else. Now add this one. 236 plus minus 236. Where are you, Rizwan? Minus 236 plus 98 plus 10. It comes to how much? It comes to minus 128. Is it right? Cash outflow. Because it is minus, we have to write cash outflow. Cash outflow from investing activities. Is it cash outflow from investing activities? It is point number B. Okay, point number B. Listen, it will never change. The same structure, is it right? The same structure. Easy scoring marks. Is it right? Easy scoring marks. Is it? How much is there? It is 128. Now, financing activities. Is it right? Financing activities. What is the financing activities? They have issued shares. Is it right? They have issued shares. Proceed from sale of shares. How much they have proceeds from sale of shares? Is it right? Next. Is it right? Next. What you have to write? We have to write that. You have to write financing activities. Is it right? Financing activities. Now, just first we will see. Is it right? We will see. On October 2000, issued 60,000. Is it right? 50 cents. Is it right? See, how much they have issued? 60,000 shares. Is it right? Into how much? 0.50. How much they got it? 30,000. Fine. Next. At a premium of how much? Is it right? This is the share value. Okay. This is the share value. How much is the premium? 100% premium. Is it right? Premium is how much? 100%. Means how much is the premium? Premium is how much? 30,000. Total is how much? 60,000. Fine. But you should not show it combinedly. You have to show it separately. Okay. You have to show it separately. And how much they have, their proceeds were used to finance and cancellation of 10% loan and sum of 5% loan on par. Is it right? They have issued. Is that what is the loan amount? Is it fine? Is it right? Now see the things. They have issued. See what happens. Is it right? What happens? Fine. Is it right? See, interesting, very interesting. They have taken this and what happened? They have reduced it, the non-current 10% loan. And they have taken this and they have reduced how much? 20 million loan. Is it right? They have reduced it how much? 20 million loan. Means loan is also decreased, 5% loan and 10% loan. Both has been decreased. Okay. Very interesting. Very, see, it is very tough. Okay. Very tough. Now, proceeds from sale of shares. Is it right? Put face value. Is it right? Put face value. 30,000 into 0.5. Is it right? It comes to how much? 30 in thousands. Okay. It is in thousands. Again, I am repeating again and again. Is it right? It is in what? It is in thousands. Fine. Next, add. Is it right? You got, see, you are getting cash. Is it right? You have to add. Next, is that proceeds from premium. Okay. Proceeds from share premium. 100%. Is it right? 100%. Same thing. 30,000 into 0.5. It comes to how much? It comes to 30. Fine. Now, put one dash here. We don't want this. At a later stage, we will see. Okay. They have repaid the loan. 10% loan repaid. Is it right? 10% loan repaid. How much they have repaid? 40. Is it right? They have repaid how much? They have repaid 5% loan also. Is it right? 5% loan repaid. How much is the 5% loan? It is going to be how much? 20. Is it right? Now, is it now? All are financing activities. Is it right? They have paid interim dividends. How much? 53,000. Point number 7. Is it right? They paid how much? Interim dividend is how much? Is it minus? Is it right? Minus. Is it right? Interim dividend. Point number 7. How much? They have paid interim dividend of how much? 53,000. Fine. That's all. Okay. Do the total. How much you will get? 30, 30, 30, 30, 60, 60 minus, for how much is this? 60 minus 40 minus 20 minus 53. Is it right? Okay. This is minus 53. Okay. Minus, this is cash outflow. Okay. Cash outflow from investing, from financing activities. Is it right? I will do one question, not tomorrow. On Saturday morning in Saturday class, I will do one full-fledged examination question of cash flow. Full-fledged. Okay? Full-fledged exam. Saturday. Keep it in mind. Okay? This is what? This is the C. Okay? This is the C. Now, okay? Now, net cash and cash equivalents. Is it right? Net cash and cash equivalents. A plus B plus C. Okay, we'll put A plus B plus C. If it is minus, we take minus. Yeah? 378. Is it right? 378, 123 plus 378 minus 128. Is it right? Plus 378 minus 128 minus 53. How much you'll get? $197. Okay, 197. Is it right? Now, now what we have to take? We have to take. Is it right? We have to take what? We have to take. See the thing. Just go back to the question as such. Is it right? That goes back to the question as such. Where is current assets? Is it right? Whereas current assets, is it right? You have here. Is it right? Investments is fine. You have investments. Investments are how much? 50. Is it right? Investment is how much? 50. Now, interest receivables over, fine. Is it right? Investment, current asset increases. Cash will, what will happen? Cash will decrease. Is it right? Cash at bank is how much? 75. Is it? Cash at bank is how much? 75. Cash in hand is how much? 5 and 7. Is it right? Cash in hand is how much? 5 and 7. Is it right? No. Fine. How many working notes we have done? 4, what? 3, 4, 3, 4, 5, five working notes are there. Is it right? We will have to do another one. We'll do. Is it right? Working note 6. Okay. Working note 6. I am doing it randomly, but I am putting the things. Is it right? Working note 6. Is it right? Working note 6. Okay. This is September 2003. This is September 2002. Okay. This is September 2003. This is September 2002. How much is there? Just you keep that one. Okay. You have where is that? You will take current assets. Is it right? Current assets. Investments. Is that investment? How much? 50, 0, 75, 0, 7 and 5. Is it right? 1. Is it? Investments are how much? Investments are 50 and 0. Is it right? Cash in hand is how much? Cash in hand is how much? Cash in bank 75, 0. Is it right? Cash at bank is how much? Cash at bank. Is it right? Cash at bank is how much? Cash at bank is how much? 75 and 0. Cash in hand is how much? Cash in hand is 7 and 5. Okay, 7 and 5. Okay. Now they have the bank overdraft also. Is it right? 0 and 70. Okay, 0 and 70. Other things we have taken. Every other thing we have taken. Any doubt you let me know. Okay, any doubt you let me know. Is it right? You have the bank overdraft. How much is the bank overdraft? It is 0. It is how much? 70. Minus. Okay, minus. How much is there? This is the how much you'll get. This is the 65. Is it right? How much is there? This is 65. And this is how much? 125, 132. Is it right? This is the opening balance. This is the closing balance. Is it right? This is the opening balance. Is it right? This is the closing balance. 65 and 132. Okay? Now. Is it right? Now, what we have to do? We have to add opening balance. Is it right? Unfortunately, opening balance is in minus. Okay, opening balance is in minus 65. Okay, opening balance is in minus because it is bank overdraft. What is the difference? 2, 9 minus 6, 3, 1. See, this is the close. Is it right? This is the closing. We are not supposed to do any adjustments. Is it right? Is it? We have to get it from the calculate. Whether we have our answer is right or wrong, to know it, whether our answer is right or wrong, to know it, we have to make sure that yes, 132 and 65. How much is there? Here we have done. Is it right? 132 minus 65. Is it right? Is it? This is what? This is nothing but. Is it right? I will write for you. Is it right? This is nothing. This is from where we got it. This is working note 6. Is it? This is what? Working note 6. on Saturday. Understand? When on Saturday, I am giving you time to revise it. Is it right? I am giving you time to revise it. On Saturday, we will do two questions. This is almost 20 marks question. Understand, right? This is cash flow statement is 20 marks question. Is that we will do this question. Two questions we will do. Is it? Two questions we will do. Tomorrow morning we will do section B. Okay. Now almost it is. We are starting a revision as such. Is it right? Tomorrow morning we will do section B. Okay. And the day after tomorrow we will do cash flow statement. On Sunday we will do new topic. Okay. This is where we are going to plan our concepts. Okay. This is the way we are going to work it our concepts as such. Okay. I am giving you time for you. Okay. Revise it. Question 1, question 2. Same thing. Is that one by one you revise it, you put the tick marks. Now I will go back to the question. Okay. I will go back to the question and I will make you understand. Is it right? See what happened if you take the thing. We have taken property, plant, equipment, we have taken inventory, we have taken trade receivables, cash, all these things. Is it right? Or every other item should be considered. Is it right? We have taken ordinary shares. Is it right? What is the difference? 63. Is it right? But 63 we have taken the adjustment factors. Is it right? We have taken the share premium. We have taken revaluation surplus. Is it? Retained profits will not take. Is it right? Retained profits will not, because profit before tax, that all these things has been done. Is that? We have taken 10% loans. We have 5% loans. Bank overdraft, trade receivables, income tax accruals. Is it right? We will not talk about anything. See what happens. This is very important. Finance cost. Is it right? Interest income from investments. Is that? First you have to add the amount given in the profit and loss account. Next you have to deduct the amount which are going to get in the difference. Okay, that is the normal. Is it? That is the normal process which we are going to work it. Next. Fine. Now you have the concept is clear. Okay, we will develop on this only. Nothing is going to make any. The only thing is the structure will remain same. Okay, the structure will remain same. What they are asking us, first read the extract. They are asking us to prepare only the extract. Okay, extract from the cash flow statement of BT for the year 2007, compliance with IAS 7, showing cash flow from what? Cash flow from investing and financing only. Is it right? Now, read the adjustments, additional information. Is it right? Nothing is there. See, you don't go into a balance sheet, all those things. They are very they are normal. Okay. Now, first you do this. Is that property and plant equipment during the year, assets carrying a amount of how much? For 31 million. Is it right? And was sold for how much? 21 million. Is it right? See the things. So a sale value is how much? Sale value is 21. Carrying amount is how much? Carrying amount is 31. Loss. Is it right? Loss is how much? 10. Is it right? Loss is how much? We will see this. Okay. Just I am giving you a clue about how the things will work. Okay. Now, they ask present value of the lease payments for new right to lease. This is the lease. Okay. Now you can say you have to lease. We have done in lecture 13. Okay. Lease of the asset. The present value of lease payments of the new asset acquired during the lease equal to how much? 28 million. Okay. 28 million. Fine. We have to know whether it is operating lease or it is a financial lease. Is it right? Now we will do that. Depreciation charge for the year is how much? 37. This depreciation you have to add. Okay. You have to add in the operating activities. Okay. We have to add in operating activities. Government grant is 55 million. Okay, government grant is how much? 55 million. It has been credited to operating expenses during the year. Fine, we will see. Is it? It has been credited. Credited means what? Credited to operating expenses means you have received it. Is it right? You have received the grant. Okay. How much you have received the grant? You have received the grant of worth of 55,000. Fine. Shares are how much? 1 for 2 bonus shares. See, bonus shares is not considered because in the bonus shares, last question I thought of telling you, but I missed it. Okay. I thought of telling you, but I missed it. Bonus shares is there is no cash movement at all. Okay. There is no cash movement at all. If there is no cash movement at all, then it has not to be considered. Fine. Then it has not to be considered. Utilizing share premium. Okay. Was made utilizing share premium. On 1st February, further share issue was made for cash. Is it right? We will see how it will happen. Fine. Now, first thing what we have to do is property, plant and equipment. Okay. First working notes, what we'll do? Working notes. Working note 1. Is it right? Working note 1. Okay, working note 1. Fine. Now, property, plant and equipment. Same procedure. Now you will find it so easy. Okay. How much is the opening balance? Opening balance 2007 is 2006. Is it right? 2006. Opening balance is 496. Closing balance is how much? 572. Okay. Closing balance is how much? Now, Go one by one, okay? During the they have sold an asset. Is it right? How much they have sold the asset? They have sold the asset for how much? 31. During the asset, a carrying amount 31 million was sold. A carrying amount of 31 million was sold for how much? 21 million. Okay. A carrying amount has sold 31 million has been sold for how much? 21 million. Is it right? Next. Fine. And the present value of the lease payment is this much. Depreciation is how much? Depreciation is 37. Is it right? Depreciation is how much? Depreciation is 37. Is it right? Depreciation is 37. I'm little bit slow, okay? I will not write like here. I will write here. Note 1. Okay? Note 1. Fine. Now they have sold one asset. Is it right? How much they have sold it asset? They sold it for 31 million. What 31 million worth of assets sold? How much they got it? They got only 21. Is it right? They got it only to how much? 21. But what is the value of the asset? Asset decreases. How much they have asset decreases? Asset decreases worth of how much? 31. Is it right? Disposal. We are not saying it is a sale. Okay. Disposal is how much? 31. Next, the present value of lease payment for new right of use asset acquired on the lease is how much? 28 million. Is it right? Means here what's happening? Your asset is increasing. Is it right? Your lease asset is increasing. Is it? Lease asset. How much? 28. How much? 28. Fine. That's all is it. Disposal is 31. The depreciation is 37. Closing balance this. Now, total is how much? Which side it is more? It is more on the credit side. Okay. 2 plus 1, how much? 0, 1, 10, 14, 1, 640. Is it at 640? Difference. How much? Difference is, if it is difference on the debit side, it is purchase. Is it right? Purchase. What is the 496? How much? 144. 496 plus 20. Check again, please. $496. Is it 496? This is 496. 14. Is it right? How much? How much? 116. Okay, 116. See, my approach is very simple. Okay, my approach, I will take lot of time in first one and two questions. After that, automatically you will understand. I don't need any. I will not be slow. Automatically, speed will go up. Is it right? Working note 1. Next, what is the government grants is there? Is it right? How much is the government grants? They have given something on point number 2, government grants, 55, all those things. Is it right? Working note 2. Is it right? Working note 2. Is it right? This is related to what? This is related to government grant. How much is a liability? Is it right? It is a liability. Fine. Liability. Opening balance will be on the credit side. Is it right? Opening balance will be on the credit side. Opening balance. Is it? Opening balance will be on the credit side. And closing balance will be on the debit side. How much closing balance? 80. Fine. Closing balance is 80. Now, what they have said, credited to operating expenses. Is it credited to what? Credited to profit and loss account. If it is credited to profit and loss account, it means it is debited to what? It is debited to government grant. Is it right? It is debited to what? Government grant. Understand what? If it is credited to operating expenses, means it is debited to where? Debited to government grants. What you have to write? Profit and loss account. Is that profit and loss account? How much is the grant? 55 million. Is it? How much is the grant? 55 million. Fine. Now, okay. Next, you have the government grant here also. See the things. Current liabilities. Is it right? Is it right? Current liabilities. This is non-current liability. Okay. This is non-current liability. Is it? You have the current liability also. Is it right? You have the opening balance of current liability. How much is the opening balance of current liability? Lease, government grants, opening is how much? How much is there? 20. Is it right? Closing balance of current liability is how much? Closing balance of current liability is how much? 10. Okay. Closing balance is how much? 10. Fine. Now, is it right? Now, how much is there? What is the difference? Which side is more? This is 95. This is more. Is it right? 5, 13 and 14. Is it right? 145. Is it right? Difference. See, when you are doing like this, you have to take non-current liability and current liability side by side. Is it right? 95. Difference is how much? Difference is 50. Is that difference is what's happening? If the liability increases, what will happen? Cash will also increases. Is it right? Liability increases, it will have what happen? Cash will also increases. Fine. Okay. Now, what we have done? We have done property, plant and equipment. Is it right? We have done property, plant and equipment. We have done lease. We have done no. We have done government. Is it right? We have done government. We have to do lease. Okay. Lease liability. Fine. We will do now. Working note 3. Is it right? Working note. Working note 3. Okay. Working note 3. Lease. Is it right? It is a liability. Fine. It is a liability. Debit and credit. Okay. Opening balance. Is it? Debit and credit. Opening balance. Is it right? You have current liability. You have non-current liability. Okay. You have both the things are there. How much is the current? 30. 30 and non-current liability is how much? 3. Is it right? 30. 30 is the non-current liability. Here closing balance. Is it right? Closing balance. Current liability and non-current liability. Okay. Lease. Closing balance. How much is there? Current liability is 5. Non-current liability is 49. Is it right? Current liability is how much? It is 5. Current liability is 5. It is 49. Okay. Current liability is 5 and 49. How much we have done anything on lease? Just check. We have done anything on lease. Is it right? See the profit. Is there anything? Is there on lease? The present value of lease payment for right to sale acquired during the lease is how much? 28 million. Is it right? How much is there? 28 million. Present value of lease. Is it right? Lease means asset is increasing. Sorry, liability is increasing. Is it right? Liability increases. It will be on the which side? Credit side. Is it right? See the things. What's happening? Is that liability? Lease is a liability. Is it right? Liability increases. Is it right? Liability increases. It will be on which side? Credit side. How much? How much we are talking about the things property, plant and equipment, lease. Is it right? Property. How much is there? 28. Fine. Now, which side is more? 49, 54. This is more. Is it right? 3 plus 8, 1. 61. Okay. 61. How much is the difference? Difference is how much? 54, 7. Check. Most easiest chapter. Okay, most easiest concept. We practice more on this and consolidation, simple consolidation, very you can see there is no point that you is it right? Done. Is it right? Statement of cash flow, statement of cash flow, statement of cash flow. Is it right? Statement of cash flow for the year ending. Is it right? For the year ending, which one? It is when they have said 31st March 2007. Is it right? 31st March 2007. It is only an extract. Okay, it is only an extract. It is not. We are not doing anything else. Is it right? We are not doing anything else. Is it right? Next. Particulars amount. Okay, they are asked us to do only investing and financing activities. Okay, they ask you only to do investing and financing activity. Cash flow from investing activities. Is it right? Now they have sold. Is it right? They have sold. Add sale of property, plant and equipment. Where is the point? Point number 21 million. Is it right? Note 1. Is it right? This is where this is what happened, my dear. Is it? This is note 1. How much? 21 million. Okay, this is in millions. Okay, this is in million. How much? 21 million. Fine. Next. Okay, next. Property, plant and equipment. Working note 1. Purchased. How much? 116. Is it? Purchased how much? 116. Is it? Less. Purchase of PPE. Is it right? Working note 1. Is it right? How much is there? Minus 116. Okay. Now, okay. Investing. Government grant. Is it right? Received. Is it right? Liability increases, cash increases. Is it right? Add. Is it? Add. Is it right? Government grant. Okay. Government grant. How much? This is working note 2. Is it right? Working note 2. How much is there? 50. Is it right? Fine. How much you will get here? 116 minus 1 plus 21. 21 minus 116 plus 50. How much you will get? You will get 45 minus. Is it right? Cash outflow from investing activities. Okay, next. Are you clear about this? Next, what is the financing activities? Is it right? Next is financing activities. Is it right? Now. Now, we have lease was there. Is it right? What happens is liability decreases. What will happen? Cash will also decreases. Is it right? Is it liability is on the credit side? Is it right? On the debit side. If liability decreases, which side we have to say? It is on the debit side. Okay. How much? 7. Fine. How much? 7. Means we have paid the lease amount. Is it right? We have what happened? Lease amount paid. Is it right? Lease amount paid. How much you have paid lease amount? Is it right? How much is the 7? Okay. Fine. Now, is it? We have to, what we have to do? Repayment of lease. Is it? Repayment of lease. How much? This is working note 3. Is it at 7? Okay. Next, you have issued shares. Is it right? How much you have issued shares? On September 1 for 20 have been issued. Further, they have issued made for cash. Is it right? They have made for cash. What is the share value have there? Share value is is it right? How much is the share value? Ordinary shares of 230. Is it? Share premium is 3560. Is it right? Now. Is it right? Now. Fine. 1 minute. We should have done the, okay, fine, no problem. Is it right? This is working note 4. Okay, working note 4. We missed. Okay, share capital. We can do without this also, but I think so. It is better we have to do with this. Okay, it is better to have. Opening balance is how much? Opening balance is always on the credit side. Is it right? Opening balance is 200. Closing balance is how much? Closing balance is 230. Is it right? 230. We have the share premium also. Is it right? This opening balance is share capital. Okay. This is share capital. You have share premium also. Is it right? How much is the share premium? Share premium is 35. Okay. Share premium is 35. Here this is the share capital. Is it right? This is the share capital. Share premium is how much? Share premium is 45. Okay. That's all is there. Is there? We don't have anything else. Which side is there? We have to. It is 275. It is how much? 275. How much is the difference? Is it? Difference is how much? Difference is 45. Liability, equity increases. What happens? Cash will increase. Equity increases. It will be on the credits. Okay. How much is the amount of thing is there? The amount is how much? Amount is 45. Okay. How much is that? It is how much? Fine. Oh, how much is it? It is 40. Is it right? 40. Thank you. Thank you. Thank you. Good. Is it right? Is it right? Issue of equity shares. Working note 4. Is it right? How much? 40. Is it right? How much? 40. Fine. Anything else? Anything else? Shares, grant, this one. Okay. Profit for the year is how much? Profit for the year is 31. Is it right? Profit, they have given you retained earnings. Is it right? They gave you the retained earnings. Fine. Now 1 minute. Is it right? See the things. Is it right? 1 minute. This they have not told us. Is it right? See, what we have to do? We have to take into consideration working note 5. Okay. They have given you retained earnings. Is it right? Previously we have not done, because previously they have given us profit for the year. Is it right? Profit before tax. They have not given profit before tax. Is it right? They have not done profit before tax. They gave you the retained earnings. Is it right? Retained earnings, credit and debit. Is it right? Retained earnings is a liability. Opening balance will be on the credit side. Is it? How much is the opening balance? Opening balance is 147. Okay. Closing balance is how much? Closing balance is how much? Closing balance is how much? Retail 147, 166. Okay. Profit is how much? 31. Is it right? Profit is our closing balance is how much? 166. Is it right? Closing balance is how much? 166. Is it right? Next. Profit is how much? Profit is that profit is always credit. Is it right? They credit all incomes and gains. Is it right? Profit will be credit. Profit for the year how much? Profit for the year is how much? They have mentioned it is how much? 31. Okay. Now, what is the total of this? This is, we are doing extra, because why we are doing, I will explain. I am explaining that we are doing this because we didn't have the profit for the year. Is it right? 178. 178. Difference. What is the difference? Can you tell me, please? Anyone? Difference is how much? 12. What this difference is called as? This difference is called as dividend paid. Is it right? Difference is called as dividends paid. Fine. If we are saying it is dividends paid, it has to show it in where? It has to show it in financing activities. Is it right? It has to be shown in the financing activity. In the financing activities, dividends paid. Working note 5. Is it right? Working note 5? Yes, working note 5. How much? 12. Is it right? How much? 12? How much you will get? 40, 33, 33, 31, 21. Is it right? So this is cash generated from investing activities. Okay? Fine. Still 10 minutes is there, but I will stop here. Okay? I will stop here.